Good afternoon, ladies and gentlemen, and welcome to Shearwater Group PLC's investor presentation for the final results year ended 31st of March 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I would now like to hand over to Phil Higgins, CEO, Paul Mcfadden, CFO of Shearwater Group PLC. Good afternoon, guys.
Good afternoon, and thank you. And welcome, everybody, to our very first retail and publication of our full year annual results. I just want to introduce myself. I'm Phil Higgins, I'm the CEO, and also online you have Paul Mcfadden, my CFO. We're going to be turning off our cameras to preserve our bandwidth. We will try and rejoin with the cameras towards the end of the presentation if available. So this is me just turning off. Don't think that we're going to be losing anything further, and then we'll carry straight on with the presentation. So if I could just draw you through to the disclaimer. And as I said, today's presenters is myself, Phil Higgins. I've been in the industry for many years. I've been there since the birth of the PC, and I've worked in the commercial side of IT ever since. And with me today, I have Paul Mcfadden, who you get to meet during the presentation. I'd also like to introduce you to other board members who can't be with us today, and just give you a little bit of reason as to why Brookall is part of this organisation and why the shareholders of Brookall decided to actually sell to this organisation. So Shearwater is got a very prestigious board. From the bottom there, you'll see Marcus Willett. He's the ex-deputy director of GCHQ, first senior advisor for cyber. So you can appreciate for a company that specialises in security and cyber, it's a very attractive proposition in having someone like Marcus be able to direct us and help us in our strategy. Also on that, to help us from an experience perspective, we have Lord Reid. Lord Reid obviously has worked underneath Tony Blair's government, and he's got a fantastic insight into the government, local workings, and also a large-scale development of large corporates. And they together form our advisory panel. Above that, we've got our board of directors. You can see David Williams there. He's the former NED and founder of Breedon Group. It's a £1 billion organisation, and David comes with a 30-year pedigree of working within the city, raising funds for major corporations and building them up to significant in size. Myself, as I mentioned, 30 years plus inside the IT industry. Paul Mcfadden, 10 years plus experience working in senior financial positions. Giles Willits, non-executive director and CFO of IG Design PLC. So obviously very well versed in corporate governance and finance. Robin Southwell, former CEO UK of Airbus, and Stephen Ball, former CEO of Lockheed Martin UK. Together, these board of directors actually do help advise and consult, and they're interested in what we do. So they're not a board of directors to simply sit back and sign off the accounts each year. They're actually involved in the business. I'm glad to say the business also talks to them on a regular basis. We hold events where we can share time with them, gain their experiences, and they assist us in terms of our development for the company. Moving on, so what is Shearwater? Why are you here? Shearwater is a group PLC. It's an award-winning organisation resilience group. We provide cybersecurity, advisory and managed security services to help assure and secure businesses in the connected global economy. What that means to us is we believe it's people, processes and technology all go together to create organisational resilience. Having great technology and having poor processes can obviously be very damaging. to simply just go out there and have all the technology in place without having it tested through the correct process can also be damaging. So this is why we bring the three together. So moving on. To give you a little bit of overview as to what the company is about and how we position it. So as I said, we're an award-winning organisational company, and we have we divided our company into two areas of interest. One is our software side, where we own IP, we own patents, and we deliver our own technology through either direct or through a global distribution of reseller networks. And then we also, on the other side, we have our services business, where we collectively, for our service companies, we provide solutions and consulting and advisory services. So first of all, going back to the software side, there we develop our platforms of secure identity. This is the authentication. It's a very old process of logging on. And I'm glad to say, and later on this stack, I'll be able to give you some updates on what we've done with that product since acquiring it. But what it is, it's there to allow you to log on to your corporate network and gain access to your corporate data and facilities. And as you can appreciate with the environment today, all of those staff and team members were instructed to work from home due to COVID. And so this type of technology becomes quite relevant in today's environment. Good thing about software when you own it is obviously the recurring revenues. And we have circa 90% recurring revenues against our established offerings, which is obviously very impressive stat, which we would look towards building upon as we go through the course of the next 12 months. Inside those that division, we've got two brand names there: Secure Envoy and GeoLane. Both of these are well established inside the industry, and they contribute to, and we keep their brand names there because we do believe there is brand value in having their logos still available. So they're not all going to suddenly become SHEARWATER Group PLC. They work underneath and part of SHEARWATER Group. On our services side, as I mentioned, we bring together service solutions and governance, risk and compliance. And there we have a circa 25% recurring revenue. We have a lot of managed services, third-party support services, which we renew on a regular basis. We have consulting engagements which reoccur every single year, and that blended gives us a 25% recurring position. We do all of this through around about 90 employees across 7 offices in the UK and the US. We focus purely on the Fortune 500, government and SMEs. We do not do, at this stage, B2C. And one of the purposes of this group is obviously to offer our customers an end-to-end organisation resilience solution. We are looking to be able to service all of their needs from one single point. Also, we from our companies that we acquire, we obviously look for adding a PLC status to an organisation and actually helping them to unlock the value which they may have not have seen before or may not have been able to reach before due to their size and financial resources. Moving on, I'm just going to take you through just a couple of slides before I introduce Paul to actually take you through the numbers. I thought it's important in today's environment to talk about COVID. Prior to the government sending us all home, we tested out our facilities with one of our divisions. We gave minimum notice. We asked them to go home, and I'm pleased to report that they re-established connectivity within 4 hours of that instruction, during which time we didn't lose any customer continuity. All service levels were maintained. And so we're very pleased with our ability. We sell resilience to organisations, so therefore we also practice our own resilience. Part of the organisation has business continuity qualifications, other parts follow the simple process of doing so. But in the main, our company is well geared and adjusted extremely quickly to being sent home and working from remote locations. We have seen some impact on clients. We have saw an uptick in our remote software identity authentication software during the month of March. And at the same time, we saw softness in our consulting business. As the consulting is typically engaged on a face-to-face basis across the desk, obviously there was a pause and a slowdown, and no cancellations, simply a slowdown and deferral of activity. I'm glad to say since then, the process has worked itself out. We're now delivering more consultancy over WebEx or FaceTime, those types of engagements, as opposed to across a desk. So we have seen an impact from COVID. Also, one of the main reasons for Shearwater is obviously it's an investment. So part of our opportunities are to acquire organisations. We're talking to a number of companies, and both big, large, and small, and we will be able to give you a little bit more detail through this stack. But needless to say, COVID has impacted that also. Some of the larger systems integrators that we talk to have decided to defer M&A conversations until towards the end of this year. They're either looking to rebuild the revenues because of COVID, or their profitability because of that. Some of them are looking for opportunities themselves now, and they think that may appear itself. And what we're seeing also is some of the smaller companies are coming forward, and we're seeing some consulting organisations and software organisations, and they're looking for a safe harbour during this difficult period. So COVID across the board has an impact on us, and in certain places it's had a negative effect, in others it's actually assisted. If I can now hand over to Paul, who's going to take us through a few slides on our financial achievements. Paul.
Great, thanks Phil, and good afternoon everyone. Okay, slide number 9 states the key metrics that we use to manage the business, which are group overall revenues, adjusted EBITDAs, and adjusted profits before tax. For the year to March 20, it's pleasing to see that revenues have increased on a reported basis by 41% to £33 million, with obviously strong organic growth within our softwares division, as well as obviously there's the incorporation of a full 12 months of performance from Brookholt, which was acquired in October 18. Adjusted EBITDA of 3.4 million again represents a significant improvement on a year-on-year basis of 4.8 million, and leaves us with an adjusted EBITDA margin of 10%. Factored in within here, we've seen pleasing profit growth within both our software division and our services division, as well as obviously the addition of the savings that the group made as part of the reorganisation programme, which started in April 19 and was predominantly finished by the end of the first half of the last fiscal year. Adjusted profit before tax of 2.2 million. Again, it incorporates the adjusted EBITDA improvements year on year, but then deducts finance charges, depreciation, which this year incorporates the IFRS 16 leases adjustment, which is circa 200k, and the amortisation of computer software equipment, which has come from our internally developed software businesses. If I can move you on to the next slide, slide number 10. Okay, so again, it's been a significant improvement year on year with, as discussed, revenue growth within the software division. Both Secure Envoy and Geolang have reported good year on year improvements in revenues. We have obviously had some additional revenues generated from our pen test acquisition, which was acquired in April 19. Yes, this business has had some amount of revenues deferred at the year end, but pleasing to say in most cases this revenues have been deferred rather than cancelled, and we hope to see obviously these engagements being fulfilled in the current year. Obviously, I've mentioned the full year impacts of Brookholt to the numbers, which obviously has pushed services reported year-on-year revenues up to 41%. On an organic basis, we have seen some reductions within our services business, which is due to two main factors. Firstly, we have noticed a change in the revenue mix within our services businesses, whereby we've seen low margin, high revenue sales replaced with slightly lower revenue but higher margin sales, which obviously is a sign that we're improving our profitability. And secondly, within our advisory businesses, we have seen obviously some reductions from the previous year, where we had obviously the benefits of the GDPR introduction, as well as obviously at the end of the fiscal year, some deferments of some engagements that have been deferred to the current financial year. If I can move down to our gross profit margin, we have seen improvements from 29 to 31% year on year. As part of the reorganisation that took place at the start of last fiscal year, we did review some of our sales and marketing functions within our services and software businesses, and we've been able to reduce that cost of sale. The introduction of our cross-selling programme, we hope will drive that further in the future. Administration expenses have reduced from 8.2 million down to 6.8 million. And of this 1.4 million year-on-year saving, circa 600k comes from savings made at the head office function, so circa 28%, with the balance being made from administrative functions within all of the trading entities across the group. So just examples of some of the savings made incorporates reduction in consultants cost year on year, and obviously the consolidation of some office space. Again, the adjusted Ebitda margin of 10% represents obviously a significant improvement year on year. And moving forward, we feel there is possibly some room for improvements on this number, which we can come to in a bit. If I can just move you on down to depreciation and amortization charges have increased from 100k to 600k year on year, with the main variations being as a result of the introduction of IFRS 16 leases, which takes into account probably about 200k of additional depreciation and additional amortization, which has been brought about from obviously our internally developed software products, which have been released recently. The finance charge is during the year incorporates free loans that the business have, which pleasing to say is we have made repayments in the current fiscal year, and by the half year we expect to be in a position where all of the loans that are currently due within 12 months will be settled, which further will strengthen our balance sheet and give us some flexibility and some to potentially consider some debt financing for our next acquisition. If I just move you past the adjusted profit before tax of 2.2 million, amortization of acquired intangibles has increased significantly year on year as a result of a full year's worth of amortization for the Brookcourts acquisition, as well as nearly 12 months of amortization for the Pentest acquisition that was acquired in April 19. Exceptional items of 700k incorporates 300k of acquisition costs related to the Pentest acquisition, and circa 350k from our reorganisation exercise that took place in the first half of last fiscal year. If I move on to the impairments of legacy assets, so before Shearwater was Shearwater, it was a mining and an exploration business, and in the last fiscal year we impaired the remaining assets held on the books for that legacy mining business. So we had an impairment of £1 million. And very finally, we have had charges for contingent consideration and an adjustment to the fair value of deferred consideration, which both items are representative of deferred and contingent share consideration, which has been settled in the year to the ex-owners of GLN Holdings Limited. Okay. This leaves a loss before tax of 1.3 million, which is a significant improvement on the prior year. If I can move you on to the next slide. So this slide just details the group's cash flow for the year. Very pleasing to report. That's obviously firstly achieving our first underlying Ebitda profits as an organisation. We've been able to post some strong cash numbers as well. We've found our free cash flows of circa 3.8 million and cash conversion obviously well over 100%. It's worth mentioning that efforts have been made during the year to maintain and look to improve the group's working capital management, with focus being laid towards the group's credit control process. And very pleasing to say that we have seen some good results there, as well as bad debts, which has been absolutely minimal in the year to March 20. Just moving on down through the cash flow forecast statement. Sorry, investing activities of 1.4 predominantly represent the capitalisation of some internal development costs throughout the group within our software businesses, and financing activities of 1.1 million represents incorporates a 1.3 million repayments of a legacy invoice discounting facility that was settled before the end of the financial year. So this leaves obviously a positive position and a cash equivalents balance of 3.3 million at the end of the fiscal year to March 20. Obviously, post the year end, we have looked to strengthen our position so that we're well positioned for our next phase of growth. Within this, we have completed a placing at the end of April, which raised circa 3.75 million, as well as shortly after that, we've finalised a 3-year RCF with Barclays for £4 million, which is there to support further organic growth across the group. It's also worth mentioning that obviously post the year end, we have repaid a significant chunk of loans. So we move forward in a position where we've got a healthier balance sheets, whereby when we look at acquisitions, we have the additional potential facility to incorporate some debt financing into future acquisitions. Okay, if I can hand over to Phil, we'll go through the operations and strategy.
Thank you very much for that, Paul. Hopefully I'll be able to give you a little bit more colour on some of those points that Paul brought up during the remaining set of slides I have here for you. So moving on, one of the things we did in the early part of last year was establish Shearwater Shared Services. It's an area inside our business where we can bring together our HR, our legal, our marketing strategies, and start reducing costs, start leveraging the business. It's important for us to actually get control on their costs and not see this as the best place to do it, with finance heading that up. So we brought these measures in there simply to actually assist internally, first of all, but also prepare ourselves for the future. As we acquire companies, we see this platform as being key to our bringing in an organisation and quickly realising the cost synergy savings. It also provides a standard model which we can communicate across the group with. It also provides facilities for standards and control and quality. Paul briefly mentioned our cross-selling program. One thing I noticed when I took the seat as CEO is that we weren't extracting all of the opportunities out of the group. And to counter this, what we decided to do on our services side of the business was to look to see how we could share our contacts, our contracts, and also understand what sister companies were doing. For example, Brookfield would historically go into a customer, talk about Brookfield's solutions and services, and then walk away. What they do now is they're incentivized to actually not only talk about the Brookfield components, but also talk about the other sister companies. And now what we find is that between the groups, the salespeople, because they're incentivized, they don't lose out through any introduction or any additional work. And we find now that it's contributing to our profit. And if we consider that extracting this additional profit will obviously give us an opportunity in the future to make sure that we become more entrenched with our client base and being able to deliver more of a service. So we're constantly looking for that untapped value that we can actually bring out and how we can facilitate additional introductions. Obviously, on our software side of the business, because they sell through distribution and then through a team of resellers, we don't look to touch their clients. However, if in our marketing we're able to go out and talk to our existing client base about those products and services, we certainly do. And we have done that, and I'll be able to explain a little bit more about that later on in the presentation. One of the other key components inside of Shearwater as an investment is obviously our development in terms of our software. It's a very key component for us, and what we're looking to do there is to we have a very large reseller network that spans globally. It allows us to provide our products through that network. It's been resold by obviously resellers, and the more features that we can actually add to our software, obviously the more use of the software becomes. We can upsell to our existing client base. And when you consider we have circa 1,100, 1,200 end user corporates buying this software through north of 350 resellers, you can appreciate if they've already got our platform and they're already using our technology, if we add more features, it allows us to upsell those customers. Also, because of we having a more enriched product set, allows us to attract new customers in. So we're looking to tap new markets as well. Moving on. So one of the things that we did is obviously create this platform and organize ourselves effectively. And we believe now that we have got this platform for growth in place. We believe that we spent a lot of time tuning our business, getting it in the right shape to move forward. And we're looking obviously to increase our software sales. It's high margin, it's recurring revenues, it's very stable and very predictable. And more features that we can add to this, and there is potential opportunities with current COVID on how that affects people. It may present us an opportunity in the future to gain more sales. On top of that, we will continue to develop our software in-house, but at the same time, we're still looking for software companies to acquire. If there's a feature software company that can be ingested into the organization and their features be added to our existing platform, that may be a quicker route to market. So we know where we want to be. We want to be a company that can provide, from a software perspective, a platform that will service today's and tomorrow's on-prem and cloud technologies. As Paul mentioned, we went out and we did a small raise back in April, and we've also got an RCF in place. Both of those funds are there to actually assist the business in its development. Obviously, the raise was there for give us some mobility to take advantage of any opportunities of small companies that come available during this COVID period. It's also there. We did unfortunately lose an opportunity just before Christmas, where we didn't have the strength on the balance sheet that we wanted at the time. And because the company that we was looking to acquire had a shareholder who wanted to retire, he was looking more for his money out. And obviously we didn't have that position available at the time. So one reason for getting the raise in place was so that we didn't come across that problem again. On top of that, obviously to fund the business, we get involved in some very large projects, which are historically been very capital intensive. They're long programs. We get involved in lots of critical networks, a lot of critical systems and services, and they all need funding. And some of those can, with our payment cycles with our customers, larger corporates do take slightly longer than the smaller ones. And so it's the RCF is there to actually assist and help in that flexibility. One of the things, obviously, that is part of our duty is obviously to make sure we're running efficiently. So this is why the shared services has got control on the budgets and the purse strings, and that's why we're able to actually reduce a lot of the loans and a lot of the legacy challenges that the group has had. And we've now got the company into a position where we're comfortable. We got strong controls and visibility across the group. We have regular meetings with group heads, which allows us to keep a good finger on the pulse, especially during these times of COVID, where we're looking for any slight adjustments in the behaviour of our customers and/or our organisation, so we can adjust quickly and efficiently. One of the key things, being a people's industry, is keeping your staff motivated and incentivised. Within shared services, what we delivered was also a levelling of some of the packages in terms of the benefits. So, for example, staff can get Bupa if they so desire. And not all the employees had that originally, so now they do. We are bringing together other programs which will be launched later this year, which will, once again, will be of benefit to staff. We believe our packages now are attractive. And if I look back at what we have gone through over the last few months, we haven't furloughed anyone. We haven't made anyone redundant. We're a resilience company, so we sell resilience, and we're resilient ourselves. And it's important that we try and maintain that as much as possible. And during the COVID period, we have been recruiting staff. Historically, we would go out for an advert, maybe get 24 CVs come through. Now we're putting out an advert, and we're getting 3-4 dozen CVs come through. And part of that is because of obviously some of the devastation that's taking place at the moment. But others is because of we are giving very good incentivised programs and contracts to future staff. We're trying to retain the best. We're trying to attract the best. Also, I mentioned right at the very beginning of this is the strength of our board. It was the main reason for me as co-founder of Brookfield for joining Shearwater is the strength and the purpose of that board. They are there. They help. They get involved. Very hands-on, and obviously they deliver to us many relationships that we could never have dreamed of obtaining ourselves as a small limited company, but as part of the bigger group, part of the values that what we unlock from there. If I can move you on. So coming on to our strategy, what's the purpose of all of this? So this part of the strategy has not changed. This is from the original statements that we are a buy-focused group, and we are looking to acquire companies, but before we could, we had to get ourselves in the best possible shape. Last year, we made some adjustments inside the organisation. We had some duplication of services and offerings. We were able to trim some of that down. So that focus, first of all, was actually looked on at ourselves and how we actually manage ourselves. We also looked on how we actually drive a greater internal ROI against our deliverables as an organisation. So first of all, we turned the spotlight on ourselves and to get our platform in place. And now, of course, we're ready for that to move into the acquisition mode, which we had a number of acquisitions available. And I'll come on to our strategy on acquisitions very shortly. If I can move you on. So it's important to understand what do we do when we acquire a company. And what I wanted to overview to our investors was was two case studies against Secure Envoy and GeoLang, which are two of our prized companies for our software divisions. So when Secure Envoy was acquired, it was an on-premise point solution offering multi-factor authentication. It's a must-have. There's obviously, back in the day, it was not such a compliance or a regulatory requirement as it is today. So it's becoming more important. But then it was just an on-prem. So what have we done? The focus has been to evolve that into a cloud as well as an on-prem, so we can address new markets. We've noticed a lot of people come into the market space today simply just go for the cloud. Some of the older companies in that space simply are staying with their on-prem. I'm glad to say we have a foot in both camps. So we can address both markets, and we're looking to maximise our position there. What we also did was looked at Secure Envoy in terms of its multi-factor authentication, and last year the team there produced and released a platform. So it's a centralised software platform now, and on top of that, multi-factor authentication sits there as a feature, and that's an important point for us. Because what we have done also, when you start looking at GeoLang next door there, they were a small point solution with limited direct sales reach. And so they had needs as well. What they do have is a very good product set for data discovery, data extraction. So now, whereas before GeoLang could only reach a small audience, and Secure Envoy have an audience through 350 plus resellers, what we're able to do now is take GeoLang's technology and put that technology on top of the authentication secure identity platform. And what that allows us now is to offer new features. So instantly we can take GeoLang's technology, which could only reach a small area, and now we can take it global. And I'm glad to announce that this product will be coming available this quarter. We'll be making announcements, so please do look out for that. What that means is that we're getting true accretive value now. We're actually looking at ourselves and seeing how one side of our software company can help another. GeoLang still have their own focused reseller channel who specialize in key components, but also now part of their software can be made available and used by Secure Envoy to reach a global footprint. Also, there's a need inside Secure Envoy where they needed support and funding to and structure to support their team. So they took on a CIO, a industry veteran and very well qualified and an excellent asset to the group. As I mentioned earlier, we do focus on our in-house development. We know where we want to be, and we have active programs to actually create our own code and develop internally. And what we're looking to do there is put our software right in the center of the authentication, regardless of which cloud you are or which product you are. And we're looking at obviously those different strengths of being able to connect to the network. But at the same time, in developing those extra features that being driven by compliance or the security threats, we're also looking at some of those software companies that may be able to be acquired, and we can speed that process up. So we've got a two-pronged approach on that, and that's exactly the same for GeoLang. And when you start looking at the addressable markets today for someone like Secure Envoy, depending on who you talk to, and in this example here, we're referring to Grandview Research, but they talk about a 24 billion market space by 2025. And of course, depending on who you talk to, the only thing I can say, it's a big market space. And the more features that we add to that market space is obviously that market space will grow. So our opportunities can grow as we require software related companies can sit alongside or on top of and support Secure Envoy. And from a GeoLang perspective, what it does, as I mentioned, we go from a handful of local resellers to now over 350 globally. So you can appreciate there's extra value that we can actually get from these organisations with the right support and help. Moving on, looking a little bit at that demand and that growth and that opportunity. The UK government estimate that the UK's cybersecurity industry is now worth 8.3 billion. It's significant, and that's all I can say. It's a very significant market. It's a must-have. It's in the press. It's discussed on every forum, every platform. The bad people come out when there's political unrest, financial insecurities, economical risk. This is their playground. This is when they come out. So that space is likely to increase. We've got Brexit happening at the end of the year, and so on and so on. So these people are driving our market space, and so we expect that numbers to potentially actually increase as time goes on. One of the things inside that we've noticed, and you probably have as well as investors, that it's a very fragmented market, and we're looking obviously to help consolidate some of that in our acquisition strategy, which I'll talk about shortly. And of course, COVID. If you listen to the CEO of Microsoft, they've seen this 2 years of digital transformation in 2 months. And I don't know if the social appetite will be for people to work from home on an ongoing basis, if corporate UK will change the way it addresses its business. For us, we're looking internally. We've reduced one of our offices where the lease was available to do so. During last year, we managed to move a couple of offices, which once again, that's had a huge saving and impact to our bottom line. So we will continuously review that, and we will continuously monitor how our customers actually develop themselves with COVID in mind. Moving on. Just to take you through now, just some of our strategy on acquisitions. I suppose the foremost point is obviously our organic priorities. So as a group, as we are today, we'll continuously target those large corporate organisations. Be it domestically or internationally, we have a wide, deep breadth of different sector of corporate, from oil companies, telcos, banking, retail. We have a complete suite. We also look to actually leverage our client base where we possibly can. We will look to share our contracts. We look for joint propositions going to these customers. We look for asking the right questions that will allow us to take additional projects off the table. And obviously we're going to be looking to actually build also our internal service offerings. There's a number of service offerings that we had successful in be it Pentest, be it Xena or Brookhaul, and those service offerings we're going to look to make those more widely available, and they've been redeveloped, and they will allow us then to obviously produce greater revenue streams into the organisation. I suppose more importantly for me now is the selective acquisitions, and what are we going to do there? I think it's important to understand that we want to buy companies that are cash generative and profitable, or in a realistic short-term time frame, there's a path to profitability. For example, what I don't want to do is where we acquired Geolang, for example, which was a pre-rev company. I don't want to walk away from a company like that if we can actually see where there is a path of profitability through their platform or their technology being enhanced by what we do today. When you look at companies like Brookhaul, however, obviously there we'll be looking for some very, very clear profitability, cash generative indicators before we'd actually progress any further. It's got to be a clear fit. We have a clear definition of what we want to be and where we want to go. What we don't want to do is move too wildly to the left or right of that line. What we're looking for is to work inside the security, inside the cyber and the advisory space relating to that. What we don't want to be doing necessarily is PC desk side support. So rest assured, we're not going out there just because we've got money to spend on acquisitions. We're not just going to buy the first thing that comes along. We will be very selective. We're looking for feature-rich companies. We're looking for companies that can add value, accretive value. We're looking for large integrators, resellers that can actually add client base to us so that we can then leverage our cross-selling facilities. So these are all the sort of things that we're looking for with the shareholder in mind as to how can we actually improve shareholders' position. After all, I am one of the larger shareholders of the group. So for me, I don't want to see any dilution. I want to see accretive value come through. And that's what I'm hunting for. The diagram there hopefully goes some way in actually sort of trying to bring to pictures what we're actually trying to do. As you can see, on the bottom right-hand corner there, those larger customer-based ones, they would typically be representative of solution integrators, consulting houses. And those ones where they have large customer bases, they're very interesting to us. And there we have a very strict rule about who we're selecting. We do have a number of those in conversations. And as I mentioned earlier with my COVID statement, what we are seeing is that some of our larger customers, larger targets, are deferring those conversations till later in the year. The feature-rich software add-ons up on the top left-hand corner, those for us are coming through. There's a number of those that we're looking at the moment. And we'll continue to actually evaluate the suitability of that any acquisition there. So moving on to the outlook. Our current trading has seen positive momentum. We concluded last year, and I'm pleased to say so far we're on plan, and we are approaching COVID very cautiously. We are watching to see what happens. We have got yesterday. I invited staff to re-attend the workplace on a voluntary basis, should they choose to. Some of our staff have a preference for being inside that work environment. Others are still working from home, as I am today. Our platform has helped contribute to our positive momentum. It's given us greater control and visibility into the business. And now that we're pleased to report that we've finished this last year with good, strong numbers. We've still got some more work to do. We still look for some more savings inside the group, some greater efficiencies. And of course, as and when we acquire companies, we'll be looking to get the synergy savings straight away. We're also going to be focusing, obviously, on sales and marketing, making sure that we can offer the solutions for today's environment. Obviously, with the of recent weeks and months, there is a potential opportunity within inside the employee working from home. How that adjusts and how that transpires will play itself out. We've also seen a shift in some of the consulting. GDPR slowed down, and what we're seeing now is more conversations around business continuity, as you'd expect. So we will be looking to adjust ourselves as and when the market requires. But fundamental and underlining to all of that, we're looking to actually deliver strong organic growth in comparison to our competitors. And that organic growth is, at this moment in time, it's, as I say, we're on plan, and we're keeping a very steady hand on the tiller. We will continue to focus on those cost management. We are reviewing ourselves as to what we do with our offices. As I mentioned, we have 7, and there may be an opportunity to reduce that further. We will not do that necessarily at the cost of the business. We have been monitoring our productivity to date during the lockdown, and we'll continue to do so. And whilst we've been tracking very well, I am a little bit nervous to think that I do not want to be a pioneer about reducing all the offices just yet. I want to wait and see what happens with corporate UK. Pipeline of our business. We get a number of opportunities presented to us each month. We continuously are reviewing and going through NDAs and signing these NDAs, understanding what these potential acquisitions look like. And as I say, we're being very selective. We do have a number that we're talking to on a more regular basis and are more interesting to us. And we hope that COVID won't interfere too much with our plans there. We would like to think that we'll be doing acquisitions in a not too distant future. I can't put a timeline against it, as you can appreciate. There's an awful lot to get through before then, but needless to say, we are very active in that space. So what we see at the moment is, we have a strong financial position, and the placing there was for a purpose, and so is the bank facility. Those funds are still there today, and we're sitting there actively reviewing our acquisition pipeline and also the needs of the business cash flow to make sure that we can actually service it. We are now a cash generative company. We're very pleased to be contributing to the bottom line. We hope to be able to resolve all of our some of our legacy debt pretty quickly and return to full strength. Moving on, so why invest? There's a very experienced management team. We have part of the acquisition process for us is also to bring on the management teams that made those companies good. Also, the underlying management, if they're not directors, the senior management teams below those two, it's important to get those because they all contribute to the success of that company. And it's very important for us to actually enhance the value of an organisation. We're not looking to take it all over and strip out the teams for the sake of the financial savings, because then we lose the value of that company. So for us, we need to keep those teams. These are the teams that actually built those companies in the first place, and that's what we strive to do. Of course, with some of our shareholders and the founders of these companies, they will move on. They will want to retire and go and do other things. And we're perfectly happy with that. The way the process works for us is to, once again, we as these organisations come into us, is to use our shared services, quickly help organise ourselves, and to then obviously cross-train our management teams into what we do as a group and what our sister companies do. And with that, it gives us some resilience in terms of our management process. So on top of our board, we have obviously a very strong advisory. Very pleased that they're actively engaged, and that was one of the main reasons in terms of their structure and what they do and the people they have there, is why Brookfield was a very good fit inside Shearwater, and why we believe that Shearwater itself is a very good model for moving forward. The business strategy for us is proven. We're better organised as a result of it. We believe that we're in a good position to consolidate some of that market space. We believe that there is a need for that. We want to build a UK-based leading organisation that addresses key components of the security and cyber and advisory space. We have a good proposition, be it at a local level as well as a group level. We're in a high growth market. The cyber risk advisory, it's growing. And we're looking to try and do better this year in actually addressing more of that market space. So you certainly got our commitment that we will be pushing hard to get our fair share of that high growth market. As I mentioned earlier, our board, we have a fantastic advisory board, and it's very key that we keep them fully engaged and fully advising us, and they help us today with everything we do. And I'm very pleased to actually have them on there. We will, during the course of the year, as COVID releases itself, there's plenty of opportunities for our panels to present and meet with our staff. They talk with them on a regular basis on presentations and so forth. And we look to actually increase the frequency of that so that our board can be very well aware of the services offerings that we deliver. And obviously what we'll be looking for there is for them to introduce us into the contacts that they know. As I mentioned, it's a very highly fragmented market, and what we're looking for is to do some of that consolidation. We have a strong blue chip customer base, very diverse sectors, so we have an element of resilience in that ourselves. We haven't had too much loss of client due to the current situation. We are cautiously looking and reviewing those clients. So far, I'm glad to say our large corporates are functioning okay, and they're still continuing with their projects. We have we're slightly different from everyone else. We're pushing for this organisational resilience because we believe, as I say, it's more than just the technology. It's also about the people in the process, and that's what we're trying to address with our consulting and our management. And also, on top of that, we are award-winning. We have independently, we've through the group there, we have 2 Queen's Awards. We have around about 25 industry awards, from solutions to quality of service and so forth. So all in all, we see Shearwater is moving into a space where there's very few people. We're very few with the same type of quality of management teams and board, solution set and opportunity. And this is why we feel that we are a good investment.
That's fantastic. Phil, Paul, thank you very much for that, giving that presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right corner of your screen. I would like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I am slightly conscious of time, guys, but lastly, before I go back to Phil and Paul, I'd like to remind you that your feedback is important to the company. Immediately after the presentation is ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Phil, Paul, I guess we've had a number of questions through. I wanted to ask you just a selection of these as we go through. Obviously, you can review everything post-meeting. I think we've answered some of them throughout the presentation, but perhaps, Phil, I could start with you if possible. What kind of businesses are you actually looking to acquire? Can you give us a little bit of more depth on that, please?
Yes, maybe I'll drag back up this slide. So in terms of the companies that we're wanting to acquire, we want to buy systems integrators similar to a Brookhall for their large blue chip client base. That's one of the top requests. It's also a quicker one to acquire. We're also looking for the consultants as well, where we have a more rounded offering, or a wider offering of consulting services, be it through specialist technologies or through advisory. So that's very much of a big want for us. On the software side, we're looking for some of those smaller companies where they have a unique feature that we could ingest onto our secure identity platform. I prefer them to be just turning profitable as opposed to pre-rev. I would like them, to be at that scale, as opposed to what we had with Secure Envoy, was obviously the larger scale acquisition, where they're very well developed, very big established system, and that's what you're paying for. But if we go for the smaller ones, they are more affordable and we get more accretive value from them. Does that answer your question?
I think that's fantastic. Thank you very much. We've had a couple of questions just regarding, I guess, cross-selling, but again, perhaps if I can address this one to you, Phil, it really is, how are you encouraging cross-selling across the group, and what sort of methods are you using there?
Certainly. Sorry, wrong slide. So, as I mentioned here, what we have done, we didn't penalise any of the salespeople for introducing a salesperson from one of the sister companies. In fact, we decided that we would reward them both to actually help encourage the interaction. What we have found is that the salespeople now realise that if they go into a new opportunity together, they've got a greater opportunity themselves. We can also speed up the time to market. We can also reduce their workload when it comes down to sales and marketing, because we're taking them into a hot lead already, a trading customer, and they're going to get paid on that along with the introducing salesperson. So it's very much of a win-win for both of them. So we're trying to actually extract all the value out of our service customers from day one, and that program has been extended even further. We've now opened it up even to some of our back office staff, because it's the people that they know that we're interested in, as well as the people that we trade with today. So yeah, it's coin operated. It's money. It's cash. It's incentive.
Fantastic. Thank you very much. I guess one for Paul, just around margin. What sort of scope is there, Paul? Can you give us some idea of margin improvement, further margin improvement, what you can do there?
Yeah, absolutely. So obviously adjusted Ebitda margins of 10% for the year to March 20. There is opportunities for us to push this margin a number of points, certainly into the low teens, in our opinion. And how do we get there? Obviously, Phil's already mentioned the cross-selling program across the group, which for basically this will push our margins for two purposes. One, obviously, that cost of sale is reduced in terms of the time it takes to get into a client, get into a preferred supplier list. So that's time, and also obviously the speed that we can actually finalise sales will mean we're able to realise those benefits a lot quicker. Additionally, within our advisory businesses, there is obviously scope for us to improve on our utilisation of our advisory businesses. So there absolutely is some opportunities to push margins in excess of the 10% we've seen today. And very finally, I'd like to mention that the cost synergy side of things. we are always reviewing our business. As we grow as an organisation, it does present further opportunities, and this is where the shared services team has their benefits. Things such as review of the preferred supplier list, looking at consolidation of some of our suppliers across the group, we've had some successes to date with our telecommunications and some of our soft sort of staff benefits, but also there are additional cost of sales suppliers costs that we are working with, and we are looking to eke out further savings in the year ahead.
Thank you very much. I've got a question here. I guess it's a two-part question, one that's probably very topical and COVID related. So Phil, I'll probably just address this to you if that's okay, in two parts. How do you see COVID-19 playing out over the long term? Is it just a short-term boost in terms of remote working? I guess we're all very familiar with that, or is it more long-term consequences around it?
Obviously, we don't know where COVID's going, and we are reviewing that position on a weekly basis. We're listening to the government guidance and also seeing the reaction of our clients as well as our own needs. We have seen some head-turning positions over the last few months. The way it's affecting us is it potentially shows an opportunity for us to offer more secure network connection, corporate LAN activity, monitoring, and those types of things. These are all help give the information to the management teams at the corporate to help control and keep secure their business. So if people do start to work from home, your risk footprint has increased. At Shearwater, we have 7 offices. Pre-COVID, we had to look after 7 offices and the security around that. Now we've got circa 90 employees working from circa 90 locations. So we've got a lot more to secure against, and that goes for every corporate. So what we're looking at now is obviously how does the society respond against that. So we do see COVID potentially slowing down, not necessarily stopping, but changing the landscape on how we engage in acquisitions, on how we deliver our business services to customers, and we'll be looking obviously for those hidden opportunities where we can quickly adapt and move in to take advantage of.
Fantastic, thank you. And I guess just conscious of time, we've got a few more bits to get through, but I will assure investors that you guys will review all questions that are submitted. But what issues are companies actually coming to you with, re cyber security? I guess Phil, again, can I put that one to you?
Yeah, well, that is a big question. We have obviously we have a lot of banks, we have a lot of technology companies. We have some of our technology companies in the US come to us because they see our skill set as being superior in what we do. Some of our banks are talking to us because of the need for compliance-based security. You want to make sure that your payments are secure. They need to put those systems in place. We get involved in some of those threat feeds to real cyber programs, and we deliver those. We also got a lot of the regulation where they're requiring continuous regulatory audit, and we have a number of qualified staff inside the organisation that provide that service. And the proposition there is we are cheaper than the Big Four. Our staff go out there with many years of live active practice behind them, and that's what you get. What you don't get is the grad student who's just come out and you're being charged £2,000 a day for. So what we're being asked for is providing those advisory services for a reasonable, fair price, good quality work. With that, we're being asked to test the networks by our client base. We're also being asked to provide resilient solutions to help protect the business. And on the software side, we do get obviously a demand. As soon as you give the team a new feature to sell, they're off and running and they go and sell that. But then they're coming back asking for more features because their clients are looking to consolidate down some of the activities, some of those point solutions, and bring them all together. So what we're seeing from the software side is the opportunity to do some of that consolidation, to bring more features together and to address that client need.
That's great. Thank you both to Phil and Paul. I think you've answered and addressed a number of the questions from investors today. And of course, the company will review all questions submitted by investors today. We'll publish those answered on the Investor Meet Company platform. Phil, perhaps I could just touch back to you just for a final quick wrap up before I direct investors to give you some feedback, please.
Certainly. Well, this is the first time we have done this retail presentation. We spend a lot of time, obviously, talking with the institutions. We're very pleased. It's something we've wanted to do for some time. SHEARWATER is a company we're very passionate about. It is an organisation that is an investment vehicle, and below that is some very good, strong, solid organisations with some very strong, solid propositions and technology. We're very much in that space. The people are the best asset, and I believe that we have some great people. It is a good company. It's now getting itself into a very strong financial position, and we're now looking to start delivering on the shareholder and actually going out there to acquire companies. We do want to grow this company, of make it into a company of size and magnitude and purpose, and that's my remit to make sure that that happens. If I didn't want to do that, I would have retired years ago when we first sold the company. But I'm in it, and I'm very pleased to be here. I've got a great team around me. I've got great support, and I really do appreciate the support of our shareholders. And if this was enjoyable for you, we will look to do this more frequently and invite you into some of the stories and some of the things that we're doing. We will try and keep you more informed and updated through regulatory news wherever we possibly can, as the regulations will permit. Outside of that, do keep coming back to some of our websites and looking at some of the new advancements we're doing, but we announce those at a local level. And by all means, at the tail end of this presentation, I'll just put this back up on the screen for you. By all means, please do, if you have any more questions, we will get around to them all and we will come back to you. But if you do have any more, please feel free after this event to email shearwater@armourpr.co.uk. And with that, I'd like to thank you for your time.
Phil, thank you very much for wrapping up today. As I say, you will review all the questions that are submitted throughout the presentation today. Could I ask investors not to close the session, as you will be automatically redirected for the opportunity to provide your feedback to the company. If you've accessed the meeting via the website, the feedback page will appear in front of you. If you've accessed it via the link in the email, you're asked to be logged in and to provide your feedback. On behalf of SHEARWATER Group PLC Investor Meet Company, I would like to thank you for attending today's presentation. Thank you very much, and I look forward to speaking to you again soon. Thank you.
Thank you.